You are looking live at a weekly chart of the Nasdaq, which had a very strong week last week. It was up 993 points or 5.95%. Today is Saturday, September 14th. Welcome to my weekly review. Just want to go through a couple of things here on the weekly chart. The Nasdaq did make that high the week of July 19th of 18,641 and sold off. This is a 16% correction down to the lows of 15,708. You can see that it undercut its 40-week line, which it hadn't done since last year, October, when it had the three legs down. But then it had this little counter trend rally, and then it sold off the last couple of weeks. The prior week here was the first week in September. It was down 1,022 points. So we got most of that back last week, 993. So, like 29 points less. But that was a heck of a sell-off. If we look at the daily chart here, a lot of charts are looking like this because of the January 5th, that yen carry trade. So there's a lot of choppy looking charts because, the index is doing this stuff. But, for me, that's still trading within this consolidation point from, digesting these massive gains, right? And so it's just in consolidation phase. A couple things that I liked about last week, and I've got to get this off of here. Let's go back to Wednesday. Wednesday was a powerful day. This is Monday, Tuesday. Wednesday was the third day of a follow-through day. I know you're supposed to wait till day 4, but we actually had it on the third day. But it rallied through its moving averages here. And so, what you'd expect then is maybe it'll come up to the 50 and get rejected. But it had two more powerful days as it blasted through this 50 simple moving average here. And so the next obstacle or point of resistance or area of interest for me is at 18,017. We could see if it can get above that 18,017 there in the coming session. So we'll just have to wait and see. But this is very choppy. Things are happening very fast. The rotation is super fast. I mean, information is traveling faster than it ever has, and the market it's really responding fast. So you have to be flexible and open-minded because these are really herky-jerky whipsaw moves, and you lose a lot of money in a short period of time. And if you don't stay invested or stay in tune to the market, you're going to miss out on something like that, right? And then you get back in, and then you suffer this first week of September, which was horrific sell-off. Like I showed you earlier on the Nasdaq, it was a 5.77%. That's a big sell-off. And so if you get out and you're paralyzed and you don't buy anything, then you're going to miss out on another one of these. It was up 5 days in a row last week. And so you miss out on that 900 and almost 1,000 point gain. So anyway, like I said, it's moving fast. The indexes are moving fast. The stocks are moving very fast. And you just got to, one day at a time. At MC Stock Charts, we had, I think, 9 or 10 stocks on our ready list last week, and they all did pretty well because the index did well. This is the DIA, which is the exchange traded fund for the Dow Jones. And this one is just less than 0.5% off its 52-week high. So one of the strongest index, I guess you would say, because the SPY is 0.6% off its high, just a tick below. And if I go to the daily on these, you can see how they're above their moving averages now. And obviously, if you bought stock this day at 554 and you suffered this horrific sell-off, that's pretty tough to take there. That's the August 1st through August 5th low, and then it kind of got above it, then below it, playing a little teeter-totter. Now it's above it. Yeah, above it's good, below it's not so good. So we're just going to keep our eye on that 554 level from the SPY. The MDY is another one, looks the same, right? Just massive sell-off, like a little counter trend bounce, and then sell off again. So that's really the herky-jerky action is just paralyzing some retail folks, and it's very difficult to navigate And then it was up, obviously, the last 3 days of last week was very strong. September 11th, 12th, and Friday the 13th. And here is the IWM. This one's back above its 50. So looking healthier, but I got to go to the weekly. It's a weekly review. Up 4.3% last week, a little less than the Nasdaq, but still consolidating here. Having a hard time. You'd think with the lower rates, this smaller caps might do better. So let's see what happens this week when Powell lowers interest rates. See if we get a sell-off, we get some opportunities. Anyway, I'm going to go to the Magnificent Three, I guess, maybe 4 or 5. I don't know. This is Apple. Once again, it's got this in the chart, very sloppy action here on that big sell-off, the little counter trend bounce, and now just kind of flopping around its 50. I could do without that type of action. Microsoft, a little smoother. I mean, yeah, it had this gradual sell-off, pretty steep, I guess, if you own it. Had this little bounce, but it's below the 50 and then traded down below the 200. Now, last week rallied back above the 50. So it rallied back through the 200 and the 50. So that looks pretty good, just consolidating in a base. And then, of course, NVIDIA, the market's not going higher without NVIDIA. Once again, it's got this, this real sell-off, herky-jerky action. To me, this is still consolidating gains. It looks a lot like the Nasdaq, where it's just trading within this box. And once it breaks above 140, then we got something. But right now, it's just digesting these massive gains since last year, December. So it ran. I mean, it ran all the way to July, right? And now it's just consolidating July, August, and September. There's nothing wrong with that. And last week was a good week because it got back above its moving averages, but this is just consolidating in this box. And I'm looking for, NVIDIA to break above that 140 level. And I think it will do it eventually. As earnings season comes up, October, November, December, I'm expecting a strong into the year. I don't know about anybody else, but typically when the SPY sells off the first week of September, like it did, we usually have a pretty good rest of the month, and year ends are usually higher. This is Meta Platforms, traded down to its 50, found support, bounce. Now it's back above the 53.8% above the 50. I don't really want to go through all these Mag 7 because there's nothing magnificent about them. This is Tesla. You can see just consolidating in a base once again. This sell-off, man, that really shakes a lot of people out, really upsets people. Like it's at 270, 1 week, a couple weeks later, it's at 180. I mean, come on, that's pretty tough to take. But if you just look at it here, it's just making higher lows and trending higher. This is definitely in a nice channel here for Tesla. So we'll see if that one continues to trade higher. And the other one that I kind of like is Amazon. Because it got above its moving averages, had a little quiet day on Friday, but just consolidating in the base. Once again, this type of action is just going to shake a lot of people out. And a lot of charts look like this, with this big, massive sell-off down to August 5, the little counter trend rally, and then the bounce, and then below the 200, and now rally last week. So that's really herky-jerky action. Anyway, I'm going to move on to a couple of the semiconductor names. Broadcom had a fantastic week. It traded down to its 200 and bounced sharply last week. With the index being up, 5.95%, the Nasdaq was, your growth stocks are going to be up 10% or even more, 2 or 3 times the index. So to see Broadcom up 22%, that's, I shouldn't say it's an expected bounce, but it's not surprising that with the Nasdaq being so strong, some of these semiconductor names did well last week. AMD was up 13%. That's a nice bounce. Let's take a look at the daily here. Still below the moving averages. All the shorter term moving averages, trending lower here. The 50, the 10 and the 21, I guess, curled up last week. So that's a good sign. Still, AMD looking kind of raggedy, like, like a lot of stocks are now. And I know that technicians are really complaining about the charts, but that's what you have to expect when the index is doing that, being so volatile. I think we had the VIX up to 65 on the August 5th. So Yeah, it's been a volatile, past couple of months. All right, I want to get to the software names. Oracle last week had earnings on Monday and it gapped higher. And then on Thursday, I think it was Thursday afternoon, they said, we're going to expect, I don't know, 20% growth till 2029 or something. They're expecting 66 billion in sales by 2026. So 100 billion in sales by 2029. So they're just kind of saying that AI is starting to have an impact on their bottom line, and then they're looking ahead and it's going to have a big impact. It was up 14% last week. So good for the longs at Oracle. Palantir, another one, up 17%. This one you could see it broke out of this base. This one was what is announced last week that it's going into the S&P 500, which not a real reason to buy a stock. But you could see the if you're just looking at the chart and didn't know anything about the stock or the news, you just say, hey, this thing made a high of 33, pulled back to its moving average, found support, and bounced higher. That's positive, right? It's a little extended now, obviously, because it blew up off that 21, and they're right now at 6.4% above the 10 and 11% above the 21. So that's a nice strong bounce for stock that's pretty slow mover. Nice 17% gain. So congrats to the longs there. And if you're just, looking at the bigger picture, you could just say this is just kind of like an IPO base still on Palantir. And it's just starting to enter its, advance phase, if you will, and say that, this is still consolidating and still has time and still actionable. I mean, I wouldn't run out and buy it on Monday, but definitely wait for the pullback. If you bought it here, you're happy. I wouldn't chase it up here. Anyway, congrats to the longs there. DigitalOcean is one that I had on my ready list last week just because I like the chart. I think I had that 38.83 entry, which is fine. But, if you're looking at the weekly, and this is a weekly review, it's still in this like stage one consolidation base. So actually you could say this right here would be your actual buy. What is it, 51? Yeah, so there's your box. But I had it at 38. If you want to wait till 51, fine. But it's still consolidating in this stage one base. Let's see a break above here. What is that? 41.58. Yeah, I would still say that's actionable and could be on a ready list again this week, even though it was up, what was it, up 10% last week? Yeah, 11%. Still looks good to me. DigitalOcean, CLBT, this is Cellbrite. Yeah, this had a nice week. It was up over 7%. Earnings line heading due north, but you can see the breakout here was a few weeks ago. Let's take a look at this. This does not have that choppiness in the chart. Maybe what is this? Yeah, August 5th, it pulled back to 1190. Off the 50, it bounced and now formed this little shelf type action, if you will, here. Little shelf action as it pulls back to its 21, then finds support Wednesday, Thursday, Friday. Had real strong bounce. So that looks good to me as well. ServiceNow is just a larger software name, well run, nice growth, a little safer. I shouldn't say safer in this environment because this happened, right? 850. It's 850 one day, right? On July 25th. And then what, on August 5, it's 746. So what the heck's going on? I just lost $105 there in a very short period of time. And that's just the market that we're in right now. So you get the market that you get, not the one that you want. We can't always get what we want. We get what we need. AppLovin, have to mention AppLovin is one of the leading stocks on my leading stock list. Had a real strong week. You can see the breakout here. This is classic cup with handle action here. 91.91, pull back to 60, coincides with the 200, trades up and makes this little bull wedge pattern or a little handle, and then finds support at the moving averages, just bounces sharply last week. That was a 33% move on AppLovin. So yeah, anytime you get power from the pivot like that, you see these big volume bars, this is going to attract a crowd because people see this stuff, bouncing off a moving average and they're going, yeah, that's my action right there. 91, I'm all in, right? and then now it closed Friday at what, 112. So congrats to the longs there at AppLovin. That looks fantastic. A couple other ones that I like in software that I'm just going to go over quickly is Spotify. This one's just playing a possum. Once again, pulling back to a moving average here. It's like a little wedge pattern or a handle, if you will. And then found support and bounce. The other one is Duolingo. It's in the same group. Just a double bottom base here. Finding support at a moving average and bouncing pretty decently last week. It was up nearly 10%. So you could see that double bottom on the weekly. So software it's hit and miss, but there's a lot more hitting now than before. So I just went through a bunch of good names there in software. I've got to get to the data centers and the power companies that are going to provide energy for these data centers. And this is Vertiv Holdings. And this one just broke above this downtrend line. I put this on the ready list last week as it broke above there on Wednesday, and then followed through nicely. It was up 19% last week. So that's a nice move for Vertiv. Also VST, this is electric power. Utilities usually don't run that much, but it was up 16% last week. And you can see that it did something similar to Vert, where it just traded above that downtrending line. And when I get bored, I just start drawing lines. Anyway, there it is. Yeah, nice break above that line there. So that one looks good as well. Just a lot of them were busting out last week. GE Vernova. This one, when I mentioned this, I hear people don't like this company. I guess, I don't know, they got an issue with it, but it's just a stock. It doesn't know I own it, so I don't really care. You could see this IPO consolidation, this big move from the IPO consolidation, and blasted up 14% last week. We'll take 14% week every week, won't we? So that one looks it's extended now, but a nice strong move. And maybe if you're interested, wait till those moving averages catch up with it. STRL. This is one that I really like as well. Sterling broke above its downtrend line. Common theme here in this group, where it just broke above on Friday here. So I kind of like this one. I still think it's actionable there around that 130 level. Like I say, when I get bored, I just start drawing lines. So yeah, it's making higher lows and trading in this channel, and I kind of like it. So draw those lines. That could appear on my ready list as well. STRL. Another one is Quanta Services. I really like this one for a long time. It's just got good growth, solid, steady company, and it ripped through its 50, undercut the 50 and rallied through it. So Quanta looks good. It's a weekly review, so I should show you the weekly chart. Yeah, still consolidating within a base, so that one looks fine. Not as good as VST or STRL or GEV, in my opinion. And the last one I'm going to look at is Constellation. You can see on the weekly, it's just consolidating within a base. It's kissed its 40-week line several times here in the last couple of months. That's got to be the August 5th day, right? I mean, a day that will live in infamy. Yeah. August 5, undercut the 200, rallied back up, got rejected at the 50. Kissed the 200 again. Now this time rallied back through it. So to me, that 199.11, well, let's just call it 200. If it can get through that 200 area, I like it better above 200 than below it. How about that? And 199, that could be on a ready list as well. If they continue to get some love from the investors, you can see the volume here is below, the 50-day average, but price pays, only price pays. All right, I'm going to move out of this group. I got to go to the top performing group this year, and that's the hospital group. I shouldn't laugh. I don't really see hospitals as being leading stocks or a leading group, but they are. Maybe all the boomers are going to hospitals now. I don't know. There's a lot of them, but you can see that it's ranked 7, but it's the top performing. So don't confuse ranking with performance. THC was up 5.87% last week, so that's a nice week. You can see it pull back to its 50 a couple times here, and it's found support at its moving averages. HCA, this is a 100 billion market cap stock. This is not a small company, and you can see it continues to find support at the 21. I like stocks that just quietly move higher, finding support at their moving averages. So yeah, I really like HCA, and then UHS is a Universal Health. This is a 16 billion market cap, and it's kind of doing the same thing where it's finding support at its moving averages. So those all look good, and you can't complain, about performance. These ones are performing. So I'm going to just move on from that group. I just had to point that out because they've been so darn strong. The retail group is hit and miss, much like software. You get some that are really getting crushed, and you get some that are crushing it. Hamilton Beach, they make the blenders and household appliances. The group isn't very strong, 124, but this one broke out, pulled back to the 21, found support and bounced higher. So I like that type of action. You can see the base here, earnings line heading north, relative strength line heading north as well. So I like that one. Of course, Shark Ninja, had it on a ready list a while back. It really broke out, formed a shelf, and then last week it was up 9%. So, and this week I think it was up like 30-something% when it broke out from earnings. Straight up from the bottom, it was up what, only 16%. That's what the heck? What a laggard. So there you can see the breakout on the daily chart, and then it formed this little shelf type pattern as it pulled back to a moving average, found support, and now, blasting higher. Like I said, it was up more than 9% last week. So Shark Ninja looks good. KDP, Dr. Pepper, I guess this is a college football play. I don't know. This is usually a slower moving stock, but man, it looks darn good. Just quietly surfing its 10 EMA like Kelly Slater. You can see this group is number 3 of 197, ranked number 3, and it's been up what, 5 or 6 weeks in a row. So Dr. Pepper looks fantastic. I'm just pointing this out. I'm not, buying Dr. Pepper, or I'm not buying MELI either, but it had a good week. You can see it was up nearly 7% last week. Broke out of a base. This is why I say you got to wait for them sometimes when they do this, they just form a shelf, allow the moving averages to catch up, and then they get bought up again. And MELI, making new highs last week. We like new highs. And RH, they reported earnings and gapped higher. This is a move not to be ignored. 25% move with massive volume. And it got some pin action for our house, which, was definitely not looking too good. That looked like it was living in the ghetto, the outhouse. But it got an 11% move on Friday. Our house was a strong stock. It's shown the ability to make these big moves, right? I mean, this thing has the ability to make massive, quick moves, but it sold off. And now on Friday, it got a nice bump. It was up 13% last week. So I wouldn't ignore that one. Or Sleep Number, which looks like it's just breaking out of this stage 1 base here. So that's another one that kind of interests me here. You can see as it broke above 18, it was up 33% last week. And I believe this got the little pin action from RH as well. You can see it breaking above that level right there. 1844, I still think that's actionable. I do not like this negative growth profile, but technically it's breaking out of a stage 1 base. So I'm not going to argue with that. And the last one has got to be Walmart. You can't do retail without talking about Walmart. Come on. We cannot be in a recession, or the economy can't be that bad if Walmart's looking like this. It's making new highs every week. This thing powered up last week. This is a Dow component, up more than 5%. You can see it's just, it had a flat base pattern and it just ramping up. There's a 3 weeks tight and a pullback to the moving averages. I guarantee this is this August 5th, this August 5th move right here. Yeah, down to its moving average. And since that day, it's just been romping higher. Yeah, so a lot of those charts got pulled back on that August 5th when the VIX went up above 60 that one day. All right, I'm going to move on. Enough of the retail. I got to move on to the drugs. I'm going to try to pick up the pace here. This one making a move not to be ignored. 17% on Friday, breaking out of a stage 1 base. That could definitely appear on our ready list as well. I really like the looks of that move higher. BNTX is the ticker symbol. I'm just gonna go through these drug stocks quickly. ADMA, this one was announced that it was going into the mid-cap 400, I think. I forget. 4 billion market cap, maybe it was a small cap, I forget. But it was going into an index and was bought, and you can see up 11% last week. Definitely a strong stock. You got to listen to their conference call. The CEO's got, they got a real bright future. TGTX is the multiple sclerosis one. It's just pull back to its 50, found support, just kind of making a little shelf there. This one's going to move when it wants to, not when we want it to. But I do believe going forward, they're going to have some robust sales and earnings beats in the next few quarters. And then, oh yes, SMMT. Got to mention this one. Positive trial, just blasted higher on Monday. 56%, and then followed through Tuesday, Wednesday, Thursday, Friday. Man, how much was this up last week? Like 160%. I think we'll take that with massive, massive volume. That is a breakout. So congrats to the longs there at Summit. I think I'd be selling that spike. Since I'm in the medical area, the medical product stock, this is COO Cooper. It was up 3.7% last week, but making new highs on Friday. You can see the group is a top 20 group. And so that one's looking good. TMDX undercut the 50. Now it's trying to rally back through. I like it above the 50 there. It's just a tick below it, 153.88. So, if you want to get into that one, maybe you'd say that 154.75 would be an area of interest for Transmedics. But still, I like the stock and it looks really good. Intuitive Surgical, the Da Vinci machine, this one 493.97. Definitely an area of interest for me if it get through there. And through 500, if it can rally through that old Livermore number. That would be fantastic for Intuitive Surgical. DOCS, Doximity. Another one that gapped higher, formed a shelf as the moving averages caught up. Sometimes people want to just buy the stock as it gaps higher, and then they get tired of this action, and then they forget about it and they miss out on that move. That's me. I'm talking about myself because I don't have the patience for this 3 weeks tight stuff. But it was up 8% last week, so nice move for Doximity. The NTRA, NTRA, this one was up 12% last week. You see it broke out of a base here, pulled back to the moving average, and last week blasted higher. See how it rallies straight from the bottom and then forms this little, bull wedge or handle or whatever you want to call it as it pulls back to the moving average and then blasts higher. And let me see. The last one is one that I know nothing about. Medical products, it's in that real strong group though. And I think this is actionable here around that 53 area. Definitely a point of interest. I know it gapped higher, didn't gap higher, traded higher last week. And so it's a little extended from its moving average, 6.6 above the 10. And you could see it was up nearly 9% last week, but just trying to poke above that old high there. So definitely a stock of interest. All right. Financials, I'm going to go through these quickly as well. FICO, computer software. I mean, this is what you got to love, like a quiet stock, just quietly trading higher, supported the moving average. Nobody talks about this one. It just continually grinds higher. So FICO, definitely a winning stock. PEGA, it's another one. You can see consolidating here in a stage 2 base. So yeah, I like the consolidation, pulling back to a moving average, finding support. That could be an area of interest there. That's 71. So or maybe even the 69. I don't know. I've got to look at this one a little closer. And I'll spend some time this weekend doing that before I might put it on our ready list. This is Q2 Holdings. QTWO is the ticker. And once again, in this strong group, consolidating in a base. And I think that one's actionable as well here. As you can see the consolidation there for 7 weeks. Looks pretty good. Okay, I got to get to the miners. I have a trader friend who just bugs me about the miners. No, I didn't buy GATO silver, but definitely strong stock. Just acknowledging here this cup with handle in the breakout. So I'm just doing this for a friend. This is a classic action right here. Makes that high at 2089, pulls back to a moving average, undercuts it, then blasts higher. So yeah, these look good. This is Barrick Gold, GOLD. So the miners and these gold, silver, every morning I put out those commodities, the oil, the gold, the silver. I don't know if anybody trades these, but they're looking good. You know, I got to admit it. Did I buy them? Did I trade them? No. But just pointing it out, making new highs here. This is Newmont. You can see the mining, gold, silver, top 10 group. NEM is the ticker there. And the last one I'm going to get to is Sandstrom Gold. And once again, you know, breaking out of this double bottom base. I know it's a $6 stock, but you know, so anyway, so I made my friend happy that I covered that for a second. The last group I'm going to get to is the home builders, which has been a really strong group. And you would imagine with interest rates coming down that the home builders are going to start doing a little better. This is definitely a rate sensitive group. I still like, this is my favorite one in the group because it's the largest and I like it above 193.63. And you can see it's finding support consistently at the 21. So I like that. As long as it's above the 21, me likey. Lennar, once again, kind of similar. 186.60 would be my trigger. So it's right there. What is the other one that I like in this group? Oh, Pulte. Yeah, Pulte's building a lot of homes around here, and this one broke out above that old 135.62. I don't know. I still think that's not too far away. I mean, it's up and out of there, but yeah, I'd probably wait for a pullback there. And then the last one is NVR. This one has got like a $9,000 price tag, broke out last week from this little shelf type action. You can see how it consolidated in this base, moved higher, and then formed this little shelf type pattern, and then bounced off its moving average last week. And you could see, this is the same thing. This is not immune either. August 5th, this one came down to 8,100. Now it's at 93.69. So yeah. All right, I'm going to move on from these because I want to get to a couple things here. Once, when we have a new rally, which we got last week, and the Nasdaq, breaking out like that, people, sometimes they get paralyzed and they don't know what to buy. So, I recommend buying the exchange traded funds. I don't like buying exchange traded funds, but it's good to buy something, right? So you're in the game, you got some skin in the game. And I just mentioned the home builders, XHB, this is one that, you could buy if if you want to have a piece of some skin in the game, and home builders is your group that you like, then this would be one. But to me, this is still consolidating in a base, even though it did have a 6.5% gain last week. I just like I don't know, I'd rather buy stocks than exchange traded funds, but there's nothing wrong with buying exchange traded funds. Like KBH was up 8.5% last week. So TMHC, Taylor Morrison Homes, up more than 7%. So you can buy stocks if you're good at, finding stocks and buying stocks. You can outperform the exchange traded funds. But if you want to be more safer and not get blown up in earnings, exchange traded funds have a use in the market. The insurance group, I just wanted to show this IAK definitely underperformed last week. And I think insurance, they've run up a lot. I think, they're going to start selling insurance and maybe buying a little more risk assets like the smaller caps. This is only up 1.5%, while the Nasdaq was up, what did I say, 5.95%. But once again, you can find stocks within the group outperforming, like Progressive. And that's just my point. The XLY is another one. It was up 5.5% last week. Just underperforming the Nasdaq just a little bit, but you could buy Tesla. It was up 9%, or Amazon up nearly 9%. So they're the leaders of that group. So I'd rather buy the leaders in the group than the exchange traded fund. That's all I'm saying. But the exchange traded funds do have a purpose. If you just want to have some skin in the game and don't want to get blown up on earnings. As I mentioned, the IGV last week, which is a software, I said it's hit and miss. This was up 4.76%, but if you owned Adobe, right, you were down, 5%. And this is one of the top stocks in the IGV, and Oracle is another one of the top stocks. So if you have Oracle, you're up 14%. If you have Adobe, you're down. So that's what I'm talking about. If you can identify the winners, you'd rather own that than the exchange traded fund or Adobe. And that's just my point. And the last point, somebody asked me to cover how I use options. And stocks will typically give you a daily range. And when they break above their daily range, that's when I use options. And I want a couple things with me. Like in the morning, this is September 5th. And this is NVIDIA. I like trading real liquid stocks. Makes a low in the morning and it makes a high, usually within the first 90 minutes. And then it trades within a range for the day. And on this day, it gapped lower and just stayed lower all day. So, I would definitely not be interested in buying any calls on a day like this. On this day, it opens higher and then it traded lower and it showed you the daily range and it stays within the range throughout the day. And that's what it typically does. Here it opens higher, trades lower and stays within this range the entire day. And so I wouldn't have any call to action on that. But on this day, this is September 11th, it opened higher. It gave us a high of like 111.93, and then it traded lower and gave us a low of 107.42. So that's your range, roughly a $4 range, right? There's your high, and then there's your low. So it's going to stay within the range, right? Well, we had an exceptionally strong market that day. And when you have tailwinds from the market and you have a stock, a nice liquid stock like NVIDIA, once it breaks above that range, then I'm interested in buying some calls. So it's kind of like day trading. I'm not going to sit there and buy leaps and buy stocks for months out. I don't do that. I usually buy the weeklies or 2 weeks, and it's got to move right away or I just get rid of it because of the decay. I can't stand holding on to options and having it just decay and go sideways. This is going to kill you. But if it's moving like this, like it did, what did I say? 111.93 was your trigger here. Yeah, it traded above 111.93 at this bar. It was 112. Then it pulled back. So you say, when would you get rid of it? Well, if it traded below, what was it, this bar here? Yeah, it traded above 112.06. So the low is 111.01. So if it traded below 111, I would get rid of it and just take the loss. That's the way it goes. And it didn't even come close. And it just started rallying and rallying and rallying all afternoon. So, I think they were like, God, I think I had 115 weeklies and they were like 275. They ended up being like more than $5. So it was like 100% gain in a 3-hour time period. And that's the only time I use options is when I have that type of backdrop where I have the market with me. I have a stock breaking out of its daily range, and I don't even look at the downside. I'm not going to buy puts. I'm not interested in that. I usually I want a strong market, a strong liquid stock. Then I'll put on maybe once or twice a month. I'll do that. I'm not, but somebody asked me how I trade options. That's how I do it. And so there you go. Anyway, if you want more information, you can ask me, but I like the large liquid names like Tesla, NVIDIA, Apple, even IBM is okay, but I do not like because there's wide spreads on the smaller stocks, the less liquid names. So anyway, I don't use them often, but that's the situation where I do. Anyway, hit mcstockcharts.com. We never give up. You better not either. And thank you for watching. Have a great weekend.